In this video, I'll show you how we calculate taxes owed to the federal government. Recall you watched a video on how tax brackets work. These tax brackets use a marginal tax rate, meaning the amount of additional tax paid for every additional dollar earned as income. Here you have the 2021 tax rates, and you can see we have three options: single taxpayers, married taxpayers filing jointly, and head of households. What we'll do is we'll take a certain income and spread it across the different tax brackets, depending on what kind of taxpayer you are, and apply the appropriate tax rate of each bracket. It's helpful to think of the brackets like buckets, where we're putting our money in the buckets, and each bucket has an applicable tax rate. We'll go ahead and look at some examples. In this chapter's homework problems, you'll be using the tax table to determine the amount of taxes for the following situations. In example A here, we are dealing with a head of household with a taxable income of $59,000. So what I've done here is visually taken the corresponding column for head of household from the tax table on the previous slide, and you can see each of the brackets has a particular rate just above so that we can remember what those rates are. So if you think about the $59,000, which is our taxable income, kind of think of it like as water that we're pouring into the buckets. We would take this amount of money and put it into each of the buckets until all of that money is accounted for. So here in the first bracket or bucket, this is where any dollars in this bucket would see a tax rate of 10%. So the way we do this is I'll go ahead and take the top range of my bracket, which is the 14,200, and subtract 0, because that's just the bottom of that range. When I subtract those two numbers, I will go ahead and take that difference and multiply it by the 10% tax rate, which gives me $1,420. Now, I know I've made more than $14,200, so I'll go ahead and go to the next bracket. I'll continue pouring my taxable income into the brackets. And in this case, $59,000 is greater than the top end or top part of my range. So I'm going to go ahead and fill up this bucket all the way as well. So same thing again, I'm going to do a little bit of subtraction and multiplication by taking my top end of the range and subtracting the bottom end of the range. So I'm seeing how much money goes into that bracket or bucket. So there's my 54,200 minus the 14,201, and I'll multiply that by the 12% tax rate. Again, the tax rates are in the table, in the last slide. And so when I subtract these two, I'll take that difference and multiply it by my tax rate to get $4,799.88. Now I still have a little bit of money left, and I can see that it's going to fit into my third bracket here at the 22%. Now again, this bracket is for income in between the top end of the range and the low end. My $59,000 is somewhere in the middle of that, but that's going to be my top as head of household. So we'll take the $59,000 because that's the amount of taxable income I have, and then go ahead and subtract the bottom range of that bracket. That difference then I will multiply it by the 22% tax rate, and that gives me $1,055.78. Now what we see here in these three numbers, these represent the tax amounts I owe from each bracket. So what I need to do next is to add these three numbers up to get the total tax amount owed based on my taxable income of $59,000. So adding up my three numbers, I get $7,275.66. Let's look at the next example. In example B, we have a single person with a taxable income of $36,600. Thinking back on that table, I'm going to look at that column for single persons and use those tax bracket amounts at the applicable rate. So for my first bracket, $9,950 is at the top end, and I'll subtract it by 0. Then take that number and multiply it by 10%. So in that first bracket, I'm going to owe $995 in taxes. Now I still have more money to go, so I'm going to continue pouring my income here into the next bracket. And we can see 36,600 is within this bracket. We can see at the top end, it's around 40,525. So I don't need another bracket after that. I know this is where I'll stop. But my top that I'm going to use is the 36,600. And I'll take that and subtract it by my bottom or lower end of the range, the 9,951, and then take the difference of that number and multiply it by my applicable tax rate of 12%. That gives me $3,197.88 for the amount of taxes I owe on the portion of my income that falls in this bracket. So adding up my two numbers, I will get a total tax amount owed of $4,192.88 as a single person with a taxable income of $36,600. In this last example, example C, we are now working with the column regarding married taxpayers filing jointly with taxable income of $72,800. So this is the combined income for our married couple. Now, in this bracket, we can see that the numbers are a little bit different. Here we're working with 19,900 at the top of our range, and we'll go ahead and take that and subtract 0 and then multiply it by the 10%. That will give us a tax amount of $1,990 belonging to this bracket here. And then here we're just double checking, yep, my 72,800 falls within this next bracket. At the top end, it's 81,050. So I don't need to worry about the next bracket up. This is the last bracket I'll be working with. So again, this is the amount of taxable income. I will take that and subtract it by the low end of the range in my bracket, and then multiply that difference by 12%. So once I calculate that through, the tax amount for this bracket is $6,347.88. So for the total amount owed, I will add these two numbers up, and we will get $8,337.88. So hopefully as you work through these problems, you can see how marginal tax rates work, in that making more money is not a bad thing. Yes, it might raise you into the next tax bracket, but only the money that falls in that bracket gets taxed, not the entire amount at the new tax rate. That is a common misconception. So now you know.